Okay, so so the last we've been talking about here is that remittances can have a more impact when they provide, for example, capital for starting businesses. So we talked already about human capital. Here we're talking about physical capital, physical investments that is definitely necessary for promoting economic growth, for increasing private investments that can have multiplier effects on the economy and lead to more economic growth. Yeah. So the fact that it's only 10% that is saved in investment is something that definitely can be enhanced. And also, an investment does not equal another investment. Investments are different. So how can we have more investments that are more productive, that are more needed for the economy, that increase more economic growth? That's also another issue. Yeah. So some countries have resorted to things like the diaspora bonds. Issuing bonds by the government to their migrants that are living in other countries, which is something that could be definitely used as an innovative tool in financing development. So basically, issuing bonds that can be bought by their citizens that are living abroad, that could be used to finance, for example, important infrastructure projects. So we know infrastructure investments are public goods. They are necessary to be done by governments from their local public budgets, because if the government doesn't pay for public goods, nobody will, right? This is important for governments to do, because no private investor is basically going to build the roads. I mean, they will if the government asks them to do and pays them. But no private investor would just go and build the roads just for the benefit of everyone, because they cannot have a private return out of this. The return is a general one that everybody can benefit from. So infrastructure is something that is super crucial, and this is what we're going also to talk about in the next chapter about foreign direct investment. Infrastructure is a very important, necessary investment that governments needs to do, in order to promote development of everything. No investor wants to invest if you don't have a proper infrastructure. So you need that. But the problem is, in many poorer countries, in many developing countries, that there is an investment gap, the saving investment gap. What the government, also in the public investment, so what the government has as revenue is much less than what the government needs to spend on, what the government needs in terms of public expenditure. Now, there is lots of need to be spent on public health, to be spent on public infrastructure, to be spent on public services, roads, hospitals, schools. All of this needs lots of resources, but we know that the budgets of developing countries are very limited. Of also governments. Of course, there are also issues of corruption and bad governance and institutional issues. Yes, but also there is a gap between whatever public revenues, government revenues they have, and whatever they need to spend on. This fiscal gap is big. And there are different ways that could bridge it. This is an argument that's also important in the topic of international aid, of foreign aid. But also here with remittances, they could bridge the gap. So what if the government issues bonds for people that are living abroad that could help to bridge this gap? Because if those investments are so important and are going to bring returns of investment, they can be used to pay the people out, but they can also use that money in order to finance those investments. This is something that several countries have done. You have it also in your reading. India did, for example, lots of diaspora bonds, because there are so many Indians that are working abroad, also having good salaries that allows for investments. So basically, instead of having scattered investments here and there, the governments could also try to have programs that channel those investments in things that are necessary, needed for the development process of that country. So one thing would be the diaspora bonds. Another argument that we need to talk about from a monetary perspective is also and for the government, the country's monetary policy is the source of foreign currency. For many countries, remittances, like tourism, for example, as well. Tourism is not remittances. I'm saying an additional thing is tourism, but similar to tourism, remittances is also a major source of foreign currency. People working abroad send money usually in dollars, in euros. Yeah, so this is a source of foreign currency, and we know also this is another kind of gap that exists in developing countries. Usually, they need lots of foreign currency, of hard currency, to finance their imports, and we know developing countries usually import much more than they export. Yeah, but they lack a source of this foreign currency sufficiently because they don't export much. So remittances can be a stable source of foreign currency that could help in bridging this imbalance that you have between supply and demand for the currencies. There is, however, a downside to this that we're going to talk about in a minute. Or maybe let me talk about it now. What if the country receives a lot of remittances? This can also have a negative impact on its exchange rate. The exchange rate could increase so much, their own currency could increase so much that it makes the country less competitive. And this is a downside. Let's think about that argument. I have it on the next slide. Let me see. Here, this is basically the Dutch disease issue. If you ever heard about it. I'm gonna tell you in a minute why it's called the Dutch disease, but this is one of the risks actually of receiving too much remittances. If there is too much remittance flows to a country, what could happen is that the currency could gain too much in value and become too strong. Why would it happen? If a country receives too many remittances, too much remittances, why could this lead to its own currency gaining too much in value? Because the value of currency usually depends on the supply and demand of a currency. If a country receives too much remittances, in dollars, for example, what will people do? They would sell the dollars, buy local currency, and start to spend that money on their different consumptions. Maybe part of it is going to be invested and so on. So selling dollars, buying the local currency means high demand on the local currency. High demand of a currency means the price of the currency goes higher, like any other good. More demand means higher prices. So basically, the own currency gains too much in value. This always has a positive side and a negative side. If the own currency of a country is stronger, it means when the country is importing, things are cheaper. And we know developing countries import a lot. So that's a good side. But there is also a negative side. Who is the one crying usually when the currency is too strong?
People who owns business and need to export.
Exactly. Exporters. Exporters don't want the currency to be strong because they lose export competitiveness. So, for example, Korean car manufacturers, if they want to export, so nowadays the Korean won compared to the dollar is losing value. So we know the Korean won was very close, 1,000 Korean won was very close to $1. Now it is close to 1.3. Like $1 is close to 1,300 Korean won. Although it used to be close to 1,000 at some point, and then 1,100. But now we're talking about losing almost 15% in value, 20% in value. Of course, it has also to do with international things. It has to do with importing oil and gas. It has to do with the current conflict. And many things. I'm not talking about the reasons now. I'm not talking about, it's also not coming from remittances, but I'm talking about the impact. So what happens? If you want to import, anything in dollar is much more expensive for Koreans now. But anything Korean is cheaper, also for exporting. Because if a Korean car used to be, let's say, the price of the Korean car used to be before, let's say, I don't know, let me give any price, huh? Let's say it was 40 million Korean won. So how much is 40 million Korean won in US dollars before? And how much is it in US dollars now? Cheaper. Definitely cheaper, because the Korean won is of less value. So car exporters will be happy because they basically can export more. There's more demand on any product that is cheaper. Similar in Germany, for example, when the euro is very strong, the car industry is not happy because German cars are already expensive, but they become much more expensive abroad and are less competitive. But when the euro is cheaper, they become more competitive. Nowadays, the US dollar is very high and any currency is almost cheaper compared to the US dollar. So similar with the euro is also lost a lot in value compared to the dollar. But generally, and now think of developing country perspective. Now it's a different league that we're talking about. Developing countries import a lot, yes, but they also would like to export more. They should actually export more. They have such an imbalance. They import too much, they export too little, and their export competitiveness is already very low. They are not very competitive in many products, and they are mainly exporting just simple agriculture products, raw materials, very, very limited value added to any products. Yeah? But if their currency becomes stronger and stronger, they completely lose competitiveness, especially against a country like China, for example, that have so many cheap products to export. So this is the issue of the Dutch disease. And where did it actually come from? It came originally, obviously, from the Netherlands. This is why it is called the Dutch disease. And it started actually at the time where there was a lot of natural resources found in the Netherlands. So they were exporting so much natural resources, so much oil and gas, and this basically had to do with their currency gaining too much in value. It was before the euro. It was the local Dutch currency. So when the currency gained too much in value, this was bad for all the other industries in the Netherlands, because basically it made the Netherlands so uncompetitive, because their value of the currency is so strong that nobody would do any production, any industry, and export it to other countries. It would be just too expensive and not competitive. And if you look also at the economy structure in the Netherlands and compare it with other neighboring countries, look at the economy of the Netherlands, because this happened in the 60s in the Netherlands. But if you compare in the later decades, the industrial structure of the Netherlands with Germany, for example, so different. And a major reason was the Dutch disease that let the currency be too strong to be competitive in exporting any industries, industrial products. So this has an impact on lower industrial production, industrial base, jobs in the industrial sector, in the manufacturing sector. So basically, this whole situation can be totally at the cost of the manufacturing sector. So anything that leads to too high inflows of currencies from abroad, of hard currency, there's a positive side of it, but there is a lot of negative side on the export competitiveness. And this Dutch disease argument, it comes up in many things. It's not just with remittances. It also comes when you have too much foreign aid, for example, because it comes in dollars as well, or in euros and hard currency, so it can lead to the same effect. It could come from too much revenue, international revenue from anything else, tourism as well, and so on. So this is an important drawback. So if I go back, on the one hand, it's a stable source of foreign currency, yes, but too much foreign currency coming in the country means too much demand on the local currency because people exchange the money, and this could lead to the issues of the Dutch disease that I just explained. Is the argument clear to you, or do you have any question about that? Okay, and then as a final positive argument that I have on the list here is basically that remittances could actually make some countries more resilient, and it helps them to deal with any economic shocks. And this is where we had a look at today, for example, with the COVID-19. So some countries that received the remittances were more resilient because they were still receiving lots of remittances from abroad. Or countries like Lebanon that are in complete crisis, and we see that at least remittances can still bail out somehow the people, keep countries, people out of poverty, secure at least some income, and so on. So especially if the shocks, I mean, the COVID-19 was more an international shock. But if countries are having more also local shocks, then there is no reason to think that the remittances are also affected because they are coming from abroad. They are not affected by that, but this could help to absorb that kind of shock and counterbalance and make the country more resilient in those kind of situations. So this is a positive effect and can help in those crisis situations. But of course, on the other hand, too much dependence on the remittances can have its drawback as well. So this was a summary of many positive effects. But as any balanced discussion, always, 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 you need to think of the negative side as well. Even if you think the positive side is dominating, but you always, for a balanced discussion, need to acknowledge both positive effects and negative effects. So negative effects, we named already some here in our discussion. Too much dependency, especially if the percentage of the remittances compared to the GDP are getting too high. The depreciation, the appreciation, the increase of value of the currency that could happen, that could result in the so-called Dutch disease. Yeah. So this is another negative impact that we can think of. The too much high dependence on the remittances can be a problem. The argument that was mentioned at the beginning as well, saying that maybe too much remittances could lead to lower incentives for labor market participation by the local people, especially the remittance recipient households. If they think, okay, we're already relying from the income coming from abroad, there's no need to work. Yeah. Locally, because salaries and wages will be limited anyway. So this could reduce the labor force participation in the recipient countries and actually lead to more dependence on the remittances. So some of those arguments are also connected with each other, and this is also a negative risk. What other things you can think of? Tanusha?
I think it could lead to increase in inequality between families who receive remittance and not.
Mm-hmm. Yeah, so as we said, inequality, you never know. There are so many channels through which inequality is affected here. But one thing is definitely, yes, families that receive the remittances are definitely in a better position than those that don't receive, and this could create some inequality. Also, there can be some inflation happening because of some or many households are receiving remittances and they are spending more and buying more, and this leads to an overall increase of prices in the economy. This can be a problem. Too much increase of prices, and even it can have a negative impact on the non-recipient households because they still have to face the consequences of the higher prices. And this is definitely a problem. Yeah. So we always need to think also of the negative side. More arguments you can think of on the negative side? Definitely the fact that the cost of sending money is very high. For example, sending it through the Western Union or any other kind of money transfer thing. So actually numbers show that in the fourth quarter of 2020, so this is quite recent, the average cost of sending just $200 US dollars, very cheap, small amount of money, to low middle income countries remained to be about 6.6%. That's a lot. So imagine just to send $200. So for every $100, you're losing $6.6. So $200, 6.6 out of that is about $13.2. So imagine you just transfer $200, but you lose as transferred fee already more than $13 out of them. That's a lot. And the Sustainable Development Goals, the SDGs, actually set a target that the transfer fees should maximum be 3%. But you see that we're very far from it in several regions. In Sub-Saharan Africa, it's still the highest region with the remittance cost, transfer cost, and it's still about 8.2%. 8.2% is huge. So imagine if someone just wants to send $100 back home, they lose more than $8 out of them. And why maybe for you, $8 in absolute terms doesn't seem very much, but relatively, I mean, if someone just saved $100 and for them this is big money and they lose more than $8 just to do the transfer, this leads to more people going the informal way and not using the formal channels. However, we know informal ways come also with lots of challenge and lots of risks. So the money stays in the informal sector. Maybe some people could be cheated on. If someone tells you, give me the money, I'll send it back to the family at home and so on. And some people do that kind of business, but there's no guarantee. There is no enforcement. If the money is stolen, they can do nothing about it. It's not registered, it's not official, and so on. So there are also risks related to this. So having those fees being lower, they are already lower between developed countries. So the more developed the country is, the more developed the financial system of it is, and so on, the cheaper it is. But nowadays, actually, through having lots of e-money and smartphones and transactions between mobile phones and so on, this is a huge chance to actually reduce those fees. And they are working on that, but we're not far yet, or we're not reaching the target yet as the 3% of the Sustainable Development Goals. So there is definitely the risk of insecure and risky channels of the money transfer, and also there is the idea that the informal sector in the money transfer should be less and more money should be transferred formally is absolutely challenged here, because it's very difficult if those percentages remain too high. More people are still seeking the informal way. Other challenges that we can think of is the access of the people to the banking services. I mean, 80% of people in rural areas in the least developed countries, or in other words, in the low income countries, the poorest countries, still don't have any access to the traditional banking services. And this is very challenging, because if a family member is sending money from abroad, but the family doesn't have any access to the banking sector, then they will always go through the informal way, right? So increasing, and this is important policy recommendation, improving the banking sector, improving the financial inclusion, having more financial development, having also small, even if it's very small, banking services. Some countries attach it to the post offices. In smaller rural areas, in villages, and so on, is very important. If people need to travel in order to reach a small banking institution, then it's also not safe. It takes time. And also maybe the money that they're going to get from the bank, maybe it gets stolen on their way back, especially in countries that have high criminal rates. So people were not up for that option. It's also a problem that the people don't have a saving account. They don't have any encounters with the bank. rural areas in countries that already have high illiteracy rate and lots of uneducated people. All of this doesn't help with the situation. So you can see there can be a win-win situation between already improving education, which is a development goal per se, improving banking system, which is a development goal per se, improving financial inclusion and more access to financial services is a development goal per se. But all of these also enhance the benefit that you can have from remittances. So if you improve all of those situations, you already enhance the benefits that you can have from the remittances, and more money is probably going to be saved in the banks, which can be more used for investments, so it can create more multiplier effects that we spoke about. So as you can see, although remittances is nothing governmental, it's money just privately between family members to other family members. But with the right policies and institutions, the development impact of remittance can absolutely be increased. And those policies, they don't only have a positive impact on the effect of remittances, but they are in their own already good for development as well. As I said, like improving education in general. So people then can deal better with the banks, can think better of how to invest that money and so on. Improve the banking system, improve more financial inclusion, more accessibility to banks, improve the savings market, the credit market. All of these are already good for development on their own and can also help with the remittance situation. So you can see there is a role of the governments and their policies and their institutions that can enhance the situation. For example, those diaspora bonds that we spoke about. So there can be a possibility to try to make the benefit of, or maximize the benefit of the remittances by having the right framework and the right setup for that. Then two more final risks that we should address. I mean, one was indirectly mentioned by you, although the term was not mentioned, brain drain. What if too many people are just living and working in another country? They can be blamed for this. I mean, everybody is free to choose what is better for them. But definitely, if they find better working opportunities at home, if there is more investments in their country that lead to more working opportunities, maybe less people will go. So again, this is a risk, yes, and could create more dependency on remittances. And if the situation doesn't change, also future generations will continue to just be leaving, also the more educated people. So again, there is, yes, a risk of skilled labor force that could lead to less productive workforce at home. But definitely the solution is not to prohibit people from going. The solution would be to make the home country more attractive. And this happens if you have actually more investments, because then there are more working opportunities also for the people. This happens if there is less corruption and less nepotism. So if you have people that are highly skilled and they're looking for a job, they also find a job, and not anyone else is just favored because they have the right connections. So again, if you want to reduce the brain drain, again, there's lots of homework that governments can do on the institutional side, on the investment side. This connects also with our next chapter on foreign direct investment and investments in general. So as a government, have the right incentives to attract investors, local ones and foreign ones. This creates more job opportunities and lead to less brain drain. So it is a risk of migration, yes, but it can be reduced if the governments basically do their homework. And finally, another issue, and that's a big topic on its own. I mean, what are working conditions for the migrants in the countries where they go to? And we often hear about a violation of human rights, violation of labor laws, especially those migrants that go informally, illegally. They are always in a worse situation because they are more in the dark. somehow, and they don't have proper working contracts, the rights, their working conditions, and probably if they send money home, not probably, but certainly, they also go the informal way because they are already working in the dark. So it can also get very much in a vicious circle. But that's actually a topic even on its own. But we at least should hint to that here. So as you can see, we tried here now to have a balanced discussion through how remittances can offer lots of opportunities and is definitely a channel through which at least part of development financing can happen. But we also need to be aware of lots of challenges and risks and shortcomings, lots of possibilities through which the impact of remittances can actually be improved and enhanced if we have the right policies for this. And we need to be aware of those things. So having said all of that, what would you suggest now as a policy recommendation? So if you were to advise governments, especially in developing countries, on policies that would be basically to maximize the benefit of remittance, to improve the situation, to make the effect higher and better, what would you suggest? Anyone? Tanusha?
Maybe to reduce the transaction fees, so it could be sent on the formal way, not the informal way.
Yes, already that's one thing, to work on reducing the transaction fees can actually have lots of multiplier effects, because then it goes the formal way, then it goes automatically in the banking system, then probably the money stays more in the official economy and doesn't go in the underground economy. The multiplier effects are higher, so lots of benefits. There is less risk for the people that their money is stolen from them through a risky, informal way. So lots of benefits from that. Yes. What else? We have actually hinted to many of arguments here already. I don't know why this class is always quieter than any of my other classes. Is it the timing? But I often teach at that time. I don't know. Actually, it's a nicely sized class. It's not too big. It's not 60 students. Also not too small. But seems like no policy recommendations. So you're the consultant of the government and you're advising on what to do to improve the benefits from remittances that we've been speaking about here now for 1.5 sessions. What would you advise? You will lose your job this way. Anyone? Kabir.
It's not a new idea, but what they do, for example, in Ethiopia is they would give more, what is it? They borrow more money for people who send a lot of remittances. So like for diasporas, they would give them what is it? Borrow money. The bank would borrow money with low interest rate or something without a lot of collateral damage being on hold. So the investment rate would increase.
If they already saved the money, why would they need to borrow? Or do you mean if they deposit the money in the bank, they can also get a credit based on that?
Yeah, but also like it's not that they save money. For example, if they when they are like want to invest for something and need to invest on big things like buying a building or something, the government would borrow the money with low interest rate, high, like more than they have or something.
But what did they do in return first? Or what did they do first in order to get that position? Just because they are working abroad, that's it? Or did they already
No,
did?
they would have to save the money in the bank with dollars.
Yeah, okay. Yeah. So to encourage more formal savings in the bank, basically they can tie some other benefits to that that would promote that formal saving and promote more, say, for example, selling diaspora bonds and doing things like that. Do I get right?
Yeah.
Right?
Yeah.
Okay. Yeah. Yeah. Fidalia?
I'm not sure if this is the right idea, but I feel like there also should be a better policy to protect migrant workers, because there are a lot of cases, at least in Indonesia, where migrant workers are not protected abroad because of the lack of like bilateral relationship between the two countries. I think that could be one of the things that the least thing that the government could do to maybe increase remittance and also protect the migrant workers as well.
Okay, so policies here, social policies to protect them, maybe also offer legal help in case they have issues. Usually embassies are in charge also of helping locally in the other
Yes.
countries. Yeah, but then if people are also illegally in a country, this is always a problematic
Yeah, really tricky.
situation. Okay, so getting on top of those issues is important. Yes, Johan and then Jihyun.
Maybe making foreign direct investments also easier, or the access to it, because like this would be an opportunity to fight the brain drain. Because as a result, like long term, the effect of remittance will lead to better education, and as the government doesn't want to like leave the people and maybe make them work in their own country or start businesses, maybe the government should strengthen institutions and then like make foreign direct investments easier.
Right, absolutely. And I mean, strengthening institution is a winner for everything. It has direct effects on economic growth and development, and indirect effects through everything. Helping with remittances, with investments, local and foreign, everything. So it's already a winner in every field, and definitely there are lots of synergies here between the different topics. And working on the conditions for investment could already help here in reducing the issue of brain drain. Absolutely, yes. Jian?
Oh, so like just like what Fidelia said, so in
Could
order
you speak
to
up, please?
1 second.
Yeah, a bit.
Oh, can you hear me? Because I'm really close to the computer now,
This
so
is super good now.
it's good
Big
now.
difference.
Oh, so just like what Fidelia said, to provide safe and healthy working conditions, like of course the legal terms or legal issues should be also managed. But I also think that some sort of like management through like monitoring system or any systematic systems that they can help should be provided so that they can guarantee safe and healthy working conditions for migrants.
Okay. Ida?
Yeah, also I think like you mentioned earlier that some countries already have like ministries like related to remittances. So I think the government could like help more like the families receiving the remittances. So maybe like more of the money would like be transferred on like in a formal way rather than like illegally and stuff like that.
Okay. Anyone else? Fidelia?
Well, it's just another idea that I could think of right now. Is maybe for government to improve remittance as well. They could have like a skill or like a small sessions before sending this migrant worker abroad, like to shape the skill better. Because I think a high skilled migrant workers will bring a better investment back home or like money. So maybe that could help.
Yeah. So sometimes there are workshops that do more
Okay.
trainings on that issue. If there are some ministries or authorities or institutions in the country that are maybe working on this, sometimes they are also in cooperation with other countries. Yeah. So if there is, for example, a specific migrant flow between two countries in a certain profession, so they try to improve that. So we know several countries have shortages in certain sectors. For example, in the medical sector or in the IT sector, not sufficient local people in that sector. So they try to get people from other countries there. So having maybe more trainings in specifically in that field, maybe to prepare the people not just professionally but also socially on their life there, culturally, on what they're going to expect. So that could be actually on several levels. And maybe in having assistance more, having help at the beginning, in maybe if there's a language issue, sometimes in offering a language course if it's a country that speaks a different language, and those kind of things they can also facilitate, and definitely also help more with having a formal channel through which remittances can be transferred. Thinking about those issues, also having workshops or having awareness raising in terms of what are the best options to spend the remittances on. So we talked about how the effect of remittances strongly depends on how they are spent. So why not channel a little bit how they can be spent on in channeling also people's interest and people's eyesight to the more productive ways of spending, or to more those diaspora bonds, or to more investments, to more productive investments, to more needed projects, and so on. So this is a way of doing it, to also make sure that the people have a banking account, that their counterparts, their family members at home that receive the money, that they have a bank account, that they have an access to it, that they have a safe way of getting there, and so on. So all also related to more counseling to the people that travel, but also to their family members that receive the money back home, that leads to more financial inclusion and financial development, and more staying in the formal financial system, and all those kind of things. So I tried to summarize a few policy recommendations here. Oh, not that. Here to you, I'll go back on the other slide, to the other slide, to that we definitely touched upon many of them here. Even we touched upon even some additional ones. So definitely governments should implement policies that aim to encourage the growth promoting use of remittances. Because if I go back and include that slide here, this is a final note here on remittances and economic growth. Definitely, as we said, remittances are not part of GDP, only part of GNI. But for remittances to lead to more GDP per capita, to lead to GDP per capita growth, definitely it depends on how they are spent by the recipients, as we've mentioned. So that's some sort of summary of what we said. So the effect of remittances on economic growth depends strongly on how such financial resources are going to be used in the country, whether directly by the recipients, the families, or indirectly through the intermediation of the financial institution. If they're going to deposit it in the bank, what is the bank going to do with it? Are credits, loans, and so on going to be facilitated? What is going to happen by this, and how this can affect economic growth? So if this can be channeled into productive investments, or if it can be enhancing the credit worthiness of the recipients, like this is what Kiber was saying, because they are more credit worthy, this serves like a collateral, so they can easier get also a loan or a credit if they want to build a house, buy a house, start a project, and so on. And if this increases their access to external financial resources, this also can have a positive impact on economic growth, because we know in developing countries, savings markets, credit markets are very underdeveloped. And this could actually be a win-win situation in improve those markets, and in also substituting those markets, because whatever the people have here could be an alternative to having a collateral if they want to have a loan or a credit. However, if the usage of those remittances is just for increasing people's consumption, And just simple spendings, even if it's on housing or land and so on, but it doesn't have lots of second-hand impact, multiplier impact on other people's and the economy, then probably the economic growth effect is going to stay very small and very weak. Even, as we said, there can be negative effects that could result from things like having high inflation, if people are just consuming too much, or if there is a Dutch disease effect that what we spoke about, if there are negative incentives to work in the labor market and so on. So a lot of the answer is here, it depends. And the government policy, if we go to the policy recommendation, can strongly work on improving this, it depends. Improve the circumstances that would lead to more impact by encouraging growth promoting use of remittances. So encourage that it's channeled more to productive investments, to investments in physical capital, human capital, to projects that have more multiplier effects to stay in the formal financial sector and so on. So for example, an important growth promoting reform should be in the financial system, especially the banking system. It's very important to have financial inclusion, to have financial development. This definitely amplifies, increases, magnifies the effect of remittances in growth by accelerating the capital transfers. So people will choose more the formal way rather than the informal way. And it would also allow for a more efficient use of the resources collected. They're not just going to be spent anywhere, but they're going to be spent more efficiently, more effectively, more leading to economic growth, which increases economic growth and economic development. This is super important. And if we can have a little bit of more general policy recommendations, definitely the development impact of remittances could be improved and enhanced through, as you guys said, lowering the cost of transferring the remittances. And there is modern technology that can be made use of that actually makes this easier than it used to be decades ago. Also facilitating more digital remittances, digital transfers. This is easy and nowadays not very costly and should be more facilitated, which would require definitely improving access to bank accounts, also online banking and so on, mobile remittance service providers and so on, both on the side of the sender of the remittances and the recipients of the remittances. As I've mentioned, more financial inclusion, financial development, and so on is very important. Providing financial counseling to the remittance recipient households, as I told you, workshops that tells them more about what are their options, maybe some financial literacy. I mean, there are already lots of illiteracy and lots of people that can read and write, but even when people are not illiterate, it doesn't mean that they understand financial terms. They can already be tricky even for well-educated people. So offering help in that regard can also be a win-win situation, can mobilize more savings into the official financial sector, and can also lead to lots of multiplier effects. So linking the remittance recipient households to financial products, similar to what we talked about, the diaspora bonds, having saving accounts, maybe also linking to insurance markets, health insurances, and so on, can also be an additional multiplier effect. Definitely creating channels of productive use of remittances is very important. Like the diaspora bonds we spoke about, remittance-linked loans, for example, like what Kiber was saying, making it more possible to have a loan if you have a remittance account and so on. They can have more multiplier effects, both at the household level, the household that receive the remittances, and at the national level, if you think of all the multiplier effects that it creates. So whenever you think about the remittance topic, don't only think about the family that receives the money. That's the direct effect, the micro effect, but also think at all the multipliers that can be created in the economy, and how these multipliers with the right policies and the right institutions can definitely be improved and magnified, and how governments can do policies that also minimize the negative effects that we spoke about. Minimize the high costs of remittances transfer, minimize the brain drain issues, Also, if I think just now, also what could be on the list, if you want to minimize the issue of the Dutch disease, then make sure that your manufacturing sector is also competitive. Have the right institutions that would make also the manufacturing sector competitive. It's very important. Then you can minimize the risk of having something like the Dutch disease that we spoke about. So big topic. Maybe people, when they immediately think about it, don't think about all those dimensions. And definitely, if we put it in the globalization perspective, we saw that this international financial flow is actually nowadays the highest compared to international investments, compared to international aid. So the impact can be big. But with also some policies and some changes and small modifications, the impact can also be enhanced and the risks and challenges can be reduced. So any comments, questions that you have on that topic before we close? Okay, so let me get to the homework for today. So as I said, we're going to have an assignment also in this lecture in this class that we didn't have so far. So I've decided to have it attached to or related to this remittance topics. This also gives us the opportunity to have the assignment not at the very end of the semester, but already now, since we're already approaching the last month of the semester. So it's gonna be essay style kind of writing, but you don't have to, it's not an essay where you do additional research on the topic, but I'm going to give you a question, a discussion kind of question. We discussed a lot about remittances, and I just want you to write from your understanding of what we spoke about in the class. So that kind of essay, and not a research side essay where you do lots of research and do lots of additional citations. Of course, you're free to do that as well. If you want to research more topics, and whenever you copy anything from anywhere, of course, you should rephrase and you should cite that. But you don't have to do this. You can just use also your understanding of the reading that I gave you already and of what we had in class, of the slides that we have, of what you heard in the lecture in answering that kind of question. Okay, but don't copy and paste from anywhere. You copy from anywhere, you need to rephrase and you need to tell me the source. This is very important. So I usually check also for any plagiarism. So be careful about this, but I'm interested more in your words, your understanding, your discussion of the topic that should reflect that you understand the material properly. So with this assignment, I'm also giving you an alternative kind of also, how do you say, option of checking your understanding. So I know that multiple choice, like we had in the midterm, they give you an option to show your understanding of the topic, but also just limited by the question without showing that you understand lots of links between things. So in this assignment, it's going to be possible for you to also show that you can discuss a topic properly, that you can write a few paragraphs that are well linked together, that are well connected, that show your understanding of a total topic rather than just, the kind of fragmented way of checking knowledge in a multiple choice kind of set. Okay, so please do it properly and use it maybe also as an opportunity for those of you who did not perform well in the midterm to improve your grading. I'm going to have all the details on that in the e-class, the task, how many points are associated with that. What I can already tell you is the deadline is, I'm give you almost 2 weeks. So I give you some more time to work on this. So until Tuesday, please be careful, Tuesday, not Wednesday, but Tuesday, May 31st. Why am I saying not Wednesday? Because our class is Thursday, so often the deadline is just the day before the class. But it's already Tuesday because I also need some time to do the gradings for this, and you should also then be concentrating also on other topics in this class. Actually, next week already, we're going to start the next topic on foreign direct investment that I hinted at several times. I'm having a paper as a reading for you, and now I hope that I see more people doing that reading. So one more reason why I chose not to have this deadline next week already, because I also want you to read the FDI paper. So this is for next week, and the deadline of the essay is almost in 2 weeks. Yeah, you have at least 1.5 weeks to work on, so it gives you more time ahead. The essay question and all the guidelines and everything will be on eClass with these slides latest tomorrow. If I manage today evening, I'll do, otherwise tomorrow morning, because I have another 3-hour class after this one. So either tonight I'll do, or maximum tomorrow morning, you will find everything on eClass. Okay, about the essay. So it's not an eClass yet, but definitely it is a discussion kind of question related to the topic of remittances that we talked about. So what you can definitely do if you want to start today, if you didn't do the reading on remittances for today, which many didn't do, you can already start by that, which will help you already while doing the essay writing. Okay. Yeah, that's it. Also, I'm gonna upload obviously that paper together with the everything that I'll upload in eClass that you can prepare for next week. Any questions before we close? And as I've mentioned, I will discuss the midterm with you here in class. I'm just waiting for whenever it's possible to have a few minutes before we close, but today we needed the whole session for the remittances. Maybe next week I'll take the few minutes for this, but I'll definitely make sure to go over that with you in the remaining sessions. So I'm sorry if I'm just postponing it until it fits well in our session. Okay, then that's it for today. Let me share the QR code for you, with you, and then you will be free to go today. So